U.S. equity markets are in one of the most important tipping points that we've seen over the past year. We're either going to see a rally or a crash over the course of the next week. Welcome to the ReadySetTrade Market Minute for Monday, the 16th of January. Let's start off with a little backstory as to why this is so important these days. So this is the daily chart of the S&P 500 chart. And again, I think most of us remember what happened here around the beginning of 22 as we had this former quiet and trending market start to all of a sudden print lower highs and lower lows, lower highs and much lower lows, lower highs and much lower lows. Still a lower high as we get into the middle of December, but now what's happened is the market's printed a higher low. Now for this to change polarity, all it has to do is to trade above 4,100, and the price is stuck right now at this confluence of this descending trend line, the 4,000 level on the SPX, and the 200-day moving average is right around the same price. So you can see the 200-day is in green here, and this has represented overhead resistance several times already over the course of the past year. So here we are pinched up against overhead resistance, and there is a massive amount of energy just waiting to be unfurled into the next move. So one of two things is going to happen. And at this point, it's not worth predicting, although I do give the nod to the upside move at this point, just based on the amount of negativity that I'm seeing out there in the market and nobody giving the upside probability any shot right now. So everybody is looking at this as saying, well, of course, the price is going to crash from here. And it certainly could. It's got that opportunity to do so. It could fail at resistance. We could have some kind of bad data point come in over the next couple of days, and that's just going to torpedo any kind of support that we have in this market. But whenever I see a situation where everybody is looking for the same thing from this market, and this is from retail analysts to social media folks on Twitter to people that are getting interviewed on network television, everybody is bearish right now looking for a recession in 2023. And quite honestly, I don't think the market cares right now. The market is thinking 6 to 9 months ahead of everybody else and is potentially pricing in what could be a soft landing, as inconceivable as that might be. So my only advice to you is to be prepared for any situation, whether or not we get an upside rally or a downside crash from here. Be prepared for either of these two to start kicking in within the next few days. That's it for today's Market Minute. We'll see you in the next one.